Yeah, I think we could approach, challenge, and maybe even get over 100K on Bitcoin. It's going to be a challenge. There'll be people who are willing to sell at that level. It's a natural behavioral sell level. But I think Bitcoin wants to get there and test it and see if it can break out above that level.
According to Hougan, Bitcoin remains in its early stages. Despite its remarkable rise, the digital asset is still considered a challenger asset, far from reaching its full potential. Hougan argues that Bitcoin's journey toward maturity will only be complete when its market capitalization rivals that of gold, a benchmark that suggests a valuation of $500,000 to $1 million per Bitcoin. Until then, it remains an asset in transition, working to establish itself as a globally accepted store of value. The shift in regulatory attitudes plays a crucial role in this evolution. Hougan emphasizes that Bitcoin's transformation from persona non grata to a level playing field in regulatory terms is pivotal. This shift removes significant barriers for institutional investors, enabling them to evaluate Bitcoin on its merits rather than being deterred by uncertainty. This clarity could propel Bitcoin into the portfolios of major institutions, driving its price into the hundreds of thousands.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Look, I think we're still very early in Bitcoin. I think until Bitcoin is the same size as the gold market, so you're talking $400,000 or $500,000 a coin, maybe more, until we get to that point, Bitcoin is still the challenger asset. It's still maturing. This change in a regulatory setting from Bitcoin going from sort of persona non grata to having a level playing field is going to help Bitcoin mature and be accepted globally as a institutional store of value asset. And if that happens, there's no guarantee that will happen, but if that happens, you're talking about Bitcoin priced in the multiple hundreds of thousands of dollars. I think that's what this change is doing. Institutions that were afraid to invest in Bitcoin last year because of the regulatory overhang, that's been removed. Now they can evaluate this asset on its merits. As you said, it's been performing exceptionally well. I think many will allocate, and I think the price will go higher. Yeah, I think we could approach, challenge, and maybe even get over 100K on Bitcoin. It's going to be a challenge. There'll be people who are willing to sell at that level. It's a natural behavioral sell level. But I think Bitcoin wants to get there and test it and see if it can break out above that level. You know, look, big picture, what are they looking at? They're looking at a system in the US that has $36 trillion in debt, that's adding $1 trillion in debt every 90 days. And they're saying, I want a portion of my wealth to be outside of that system. Because if that kind of debt accumulation keeps going and keeps piling up, something bad is going to happen. So I think whether it's people being paid directly or people just making sure they have 5 or 10% of their portfolio that's exited that system, which has that existential debt threat, I think you're going to see many more people do that, particularly since the reputational overhang has been removed, right? When those folks said, pay me in Bitcoin, you didn't have Stan Druckenmiller and, Paul Tudor Jones saying, I like Bitcoin in this environment. Now you do. So of course, that number is going to go up. The number of companies buying Bitcoin is going to go up. There are a lot of tailwinds in this industry right now. Yeah, really, I'd say 2 things. One, I still think we're very early in Bitcoin. As I mentioned, until it's the same size of gold, which is to say $500,000 to $1 million, I think it's still developing and still trying to be accepted as an institutional asset. So you're still ahead of the largest institutions. There's no guarantee we get there, but that's the direction Bitcoin is trying to travel. The other thing I would say, however, is on the reverse side, which is this is still an extremely volatile asset. It goes up, it goes down in very large amounts. You mentioned it's down 2+% a day. That's a completely normal day. And what that means for investors, if you're allocating, is, from my perspective, you want to take a long-term buy and hold perspective to Bitcoin. I don't know where it's going to go next week or the week after that. Who knows? And you want to size your portfolio appropriately. Again, when you get these really volatile assets, if you put a lot of your portfolio into it, you experience a great deal of risk. Many institutional investors are doing 1 to 5% of their portfolio. So if you're going to do it for the long term and size it appropriately. Yeah, from my perspective, it's been strictly a net good. These ETFs have been the most successful ETFs of all time. They've pulled in about $30 billion in assets, and they've used that to go out and directly buy Bitcoin. So while end investors just own the ETF does in fact own the Bitcoin. And I think that's contributed to price. Look, when the ETFs launched, in January, Bitcoin was trading around $50,000. Now we're at 90 and thinking about 100. A lot of that you can attribute to ETFs making it easier for new investors to onboard into this market. I think they've been a major winner. You did have the Department of Labor come out in March of 2022 and exercise extreme caution to any 401k provider that added Bitcoin to the investment options. It even said it would audit any provider that did so, which is an extraordinary threat from a non-investment related regulator to make. It's worth noting since that point, Bitcoin's up about 125%. So you can thank your regulators for protecting you from that. But this would be a massive unlock if we could simply remove that note of extreme caution and allow Bitcoin to sit side by side with other assets. There's $8 trillion in 401k plans, right? $8 trillion. If you think about 1% of that moving into the Bitcoin or crypto market, that is more than we saw from the ETFs by a significant fraction. And then even more importantly, Americans save every month in their 401ks. And so if a small portion of that went into a well-diversified portfolio but included crypto, you could see a persistent bid for crypto in the coming years in the same way you see a persistent bid for stocks. To me, it's mostly about letting investors access the investments they want on a fair footing. I would love to see that DOL warning rolled back and Bitcoin just be treated like any other asset.
Despite its potential, Bitcoin's extreme volatility remains a concern for investors. Hougan advises a long-term approach, emphasizing that Bitcoin's price can experience significant fluctuations in short periods. Institutional investors often allocate 1 to 5% of their portfolios to Bitcoin, a strategy that balances exposure with risk. Hougan reiterates the importance of sizing allocations appropriately and maintaining a long-term perspective. This approach allows investors to weather short-term volatility while benefiting from Bitcoin's growth potential over time.
Yeah, it's a massive game changer for the crypto industry. You have to think about this industry having spent the past 4 years with one hand tied behind its back, faced very aggressive regulatory prosecution, a lack of regulatory clarity, and now all those headwinds have turned into tailwinds. Trump and the Republican Congress overtly pro-crypto. We'll see regulatory clarity. We'll see new legislation. We may even see the U.S. building its own Bitcoin strategic reserve pile. It's like we've gone from 10 miles an hour to 60 miles an hour. That's why Bitcoin's at its all-time high and why we're optimistic about where we go from here. I do think it's reflective of the time. This industry has been persecuted for the past 4 years. There's been lawfare and a lack of regulatory clarity. And that's really set the US back from a crypto perspective. A lot of crypto innovation moved overseas. So I think that lawsuit is sort of reflective of the level of frustration that the crypto industry and supporters of innovation have felt. And it's a sign that we're going to be exiting that era and moving into a new era. So interesting to see. Look, if you look back at any change of administration, it's typical for the chair of the SEC to turn over and for the new administration to appoint their lead. I would expect that to be true here. It's probably double true since Trump has promised to quote unquote fire Gary Gensler, but that is completely par for the course. And it's worth noting that the chair is really important. They set the agenda and the tone and the tenor at the SEC. We're hopeful that we get more dialogue, more open thought, more ways to protect investors. I think that's a really important point. When you get regulatory clarity, it's not a free-for-all. It just means that there are rules of the road, so good projects are separated from bad projects, and investors have an easier way of approaching the market. The SEC and the CFTC, who wouldn't agree on how to classify the second largest crypto asset in the world, that is the kind of lack of regulatory clarity that the industry has battled through. I think we'll see 3 big changes shortly out of the gate. One that we expect to see relatively early is a stablecoin rule passed through Congress to bring stablecoins into a fully regulated setting. I think that market could go from about $200 billion to $500 billion or more in the year to come. That's all built on Ethereum and therefore good for the Ethereum ecosystem. Specific to the SEC, I think they'll quickly change rules to allow Wall Street banks to operate more easily in the crypto industry. They've been restricted from doing things like custody and trading. I expect that changes almost immediately. I think we will eventually get market structure rule that solves that question you raised, what's a security and what's a commodity, and that will unleash innovation. And then importantly for investors, we're going to see much more dialogue around what we can do in an ETF wrapper. We've seen what Bitcoin ETFs have done in terms of helping people gain safe, low-cost access to that space. I'm hopeful that with new tenor, we'll see new investments unlocked there as well. Yeah, I think at the start, what the US can and should do is not sell the Bitcoin that it has, right? The US has 200,000 Bitcoin that it seized back from Silk Road. I think we should keep that and hold that just as a down payment. What if Bitcoin really does become an institutionally, globally important means of transacting? We want to have an anchor and a piece in that. Lummis has suggested the US acquire 1 million Bitcoin. I think that would be an interesting statement that we want this important industry to be headquartered here on US shores. And so I personally would be supportive of that. But big picture, what I like to point out to investors is just how amazing it is that we're having this conversation, right? 2 years ago, it was Sam Bankman-Fried on the cover of every magazine, and you couldn't touch crypto. Now, sitting US senators and presidential candidates and elected presidents are talking about a national stockpile of Bitcoin. It shows you how fast things can change. It shows you the trajectory Bitcoin is on. And I think whatever version of it we get, it's going to be another major unlock for this asset. Yeah, I think it would be very positive for price. What you don't want to see is the US government owning a controlling portion of Bitcoin or a very large pool of Bitcoin. But you look at the gold market, and governments around the world own about 22% of gold. That'd be, 4 or 5 million Bitcoin. And gold seems to function as a non-sovereign store of value. The important thing is that ownership is distributed. At 1 million Bitcoin for the US, I think we would feel comfortable. It's still a distributed, globally owned asset, and it's still core to its true principles. And for sure, 1 million Bitcoin in new demand would be supportive for the Bitcoin price. So I think it's a win-win actually for the market.
The ongoing regulatory and institutional shifts have broader implications for the cryptocurrency industry. Hougan envisions a future where the U.S. leads in crypto innovation driven by clear regulations and supportive policies. This shift could encourage more companies to build on U.S. soil, reversing the trend of innovation moving overseas. Moreover, the development of Bitcoin ETF and stablecoins could pave the way for other crypto assets to gain legitimacy. Ethereum, for instance, stands to benefit from stablecoin growth, while a clear market structure could unlock new opportunities for the entire ecosystem.
Please like and subscribe my channel.